Welcome back to the world of finance and investing. Today, we're turning our attention to a stock that's been creating quite a stir, IRFC. To stay in the loop with our latest content, don't forget to subscribe and hit the bell icon. Today, we're diving into the nitty-gritty of the Indian Railway Finance Corporation Limited, or IRFC. To begin, let's clarify what exactly IRFC is. IRFC, established in 1986, is essentially the financial backbone of the Indian Railways. Its primary role is to raise funds from domestic and international capital markets, aiding the growth and modernization of the Indian Railways network. Now that we have a grasp on what IRFC does, we can delve into why this stock has become a hotspot of investor interest. There are three main factors that attract investors to IRFC. Firstly, it's a government-owned entity, giving it a solid backing and a sense of security for investors. Secondly, India's ambitious plans for infrastructure development, especially in the railway sector, place IRFC in an advantageous position. Lastly, IRFC's primary income comes from leasing rolling stock and lending to entities within the Indian Railways ecosystem, offering a relatively stable revenue stream. But as with any investment, the road isn't always smooth. There are potential risks to consider with IRFC stock. Three major risks stand out. Firstly, IRFC's success is closely intertwined with the performance and policies of the Indian Railways. Any negative developments could impact IRFC. Secondly, being a financing entity, IRFC is vulnerable to interest rate fluctuations, which could affect borrowing costs and profitability. Lastly, changes in government policies or financing sector regulations could impact IRFC's operations and profitability. Before considering an investment in IRFC, it's crucial to consider key metrics and financials. Three key metrics to consider are earnings per share, or EPS, which reflects IRFC's profitability, the price to earnings, or PE ratio, which can indicate whether the stock is overvalued or undervalued, and the debt-to-equity ratio, which reveals IRFC's leverage and its ability to meet its financial obligations. Remember, thorough research, understanding your risk tolerance, and clear investment objectives are crucial before making any investment decisions. Always keep in mind that investing carries inherent risks. That brings us to the end of our deep dive into IRFC stock. If you found this video helpful, do give it a thumbs up and share it with your friends. Stay tuned for more insightful content on finance and investing. Until then, keep learning, keep investing, and keep growing.